Wednesday's first glimpse Q1 GDP reading is going to be a really interesting one from the US. The full force of the COVID-19 wasn't really felt in the US, and really the West in general, until the final few weeks of the quarter. However, with the expectation of only modest growth in January and February, the cliff dive in March is forecast to drag the figure into recession territory, potentially as far as minus 3.9% of the annualized rate, compared to the 2.1% increase seen in the fourth quarter. Currently, the Federal Reserve's April meeting is scheduled for Wednesday evening. However, there is a possibility of an earlier appearance from Jerome Powell and co. If the central bank feels it needs to try and manage the GDP for that. You've sort of seen the central bank do this in recent weeks, including after one of the nastier unemployment claims readings. I think like half an hour after that, the Fed had sort of announced some kind of loans package or some kind of stimulus. That could be the case on Wednesday if they think that the market's going to take that GDP reading really badly. Beyond that GDP data, the CB consumer confidence reading is set to fall from 120 to 90.1 on Tuesday, while there's expected to be another 3.5 million unemployment claims announced on Thursday. As for the final market and ISM manufacturing PMIs on Friday, they are forecast to come in at 36.9 and 36.7 respectively. There's also, importantly, the Chinese manufacturing and services PMIs on Thursday, something that may sort of set the tone for trading at the end of the week as April turns into May. And while the manufacturing reading is set to slip from 52.0 to 51.0, obviously, if you look at that compared to the American figures, you can sort of see how far ahead China is compared to the West in terms of dealing with coronavirus. The services figure is actually forecast to rise from 52.3 to 52.8. Again, if those figures are accurate, that could be a boost for the market, sort of, again, giving some kind of example of what the end of this coronavirus could look like in terms of a recovery, even if the situation in China compared to the West is very different. Coming alongside all this data drama this week is another stacked week for US earnings. Alphabet reveals its first quarter performance on Tuesday in what could see the Google parent caught between surging traffic and a falling cost per paid click. I think adjusted earnings are expected to rise to $14.30 per share, whilst revenues are set to climb around 13% to $41.1 billion. The number of paid clicks, meanwhile, is set to be up 25.6% quarter on quarter. However, with a 7.9% decline in the cost per click as companies cut their ad spend in the face of lockdown. Thursday, I'll then see the first quarter results from Amazon. Jeff Bezos' company has been one of the major beneficiaries of the pandemic, with its stock hitting all-time peaks north of $2,400 and reports it was making like a truly remarkable $10,000 a second. Expectations then are going to be sky high heading into these figures on Thursday. However, the real benefits may not really be felt until the second quarter. Analysts are forecasting a 21.9% jump in revenue to 72.8 billion, which isn't too far ahead of the previous quarter, but with a 9.4% decline in pre-tax profit to $3.9 billion due to rising costs related to the pandemic and, just dealing with that huge surge in demand. Not to be left out, Apple is also posting its second quarter results on Thursday. The company, which is obviously very reliant on its performance in China, has already warned that it won't hit its second quarter targets for coronavirus-related reasons. That means revenue will likely be at the bottom end of the previously stated $63 billion to $67 billion range. Those same factors will no doubt also impact its third quarter guidance, which could be even more important than its second quarter performance in terms of how investors react on Thursday.